A lot of the information that I use to put together this video comes from a database called FRED. It's the Federal Reserve Bank of St. Louis. First data point that I want to touch on is this is a reading of large bank consumer credit card balances. Now, this is only large banks, so it doesn't include credit unions, doesn't include local banks. And you can see the credit card balances. These are total balances that are issued through large banks. This total balance here in 2025 is starting to get over $900 billion and coming close to $1 trillion. The next point that I want to share with you is, again, this is reported by the large banks on their consumer credit card balances. This is the share of accounts that are making only the minimum payment. So I got to be honest, I don't like the trend, but it's not all that far out of range. Right now, you can see that this is coming in just a little under 11%. The next item that I want to show you is, again, just data from large banks, consumer credit card balances that are now 30 days or more past due. And you can see that for 30 days, the prior range is between 1.2 and 1.6%, meaning about 1.5% of credit card balances are usually running about 30 days delinquent past due. It had been higher in 2024, but now we're back to 1.6%. Still not crazy about the trend, but these numbers are not totally out of whack. The next data point that I want to show you is these are, again, large bank consumer credit card balances where the balance is now 90 days delinquent. So these are credit cards that are seriously delinquent. Again, this looks really similar to what you see with the 30-day trend. So historically, not a lot has changed. What are the banks trying to tell you? Well, if you go to this is a story that was in the Wall Street Journal just a few weeks ago. This is the nation's biggest banks are saying the economy is still strong. And you can see this is October 15th. So this was about 4 or 5 weeks ago, not a very long time ago. But you can see one of the things that they point to is that higher spending points to, in addition to deal making, points to a healthy economy. They've got a couple of quotes here that got my attention. You see strong consumer spend and stable deposits, and those things just kind of paint a picture of a consistently strong consumer. That's the chief executive at Wells Fargo coming out with that. A little further down in the column from the CEO of Synchrony Financial. So he went on to say that spending was still increasing, but delinquencies and late payments are down. And then he added a comment, look, we still think the consumer is in pretty good shape. They've been very resilient. We're not really seeing any signs of weakness in this. Back to Fred, and this shows household debt service payments as a percentage of disposable personal income. So how much money is coming out of your pocket every month, not your paycheck, but what's coming out of your pocket every month to pay the bills? Debt service payments. And you can see that historically, this chart goes back 40 years to the early 80s. You can see that there was a range there somewhere above 10, but sticking around 10 to 12.5% of your disposable personal income was going towards debt payment. It did spike in the previous decade, 2005 through 2011, and then started to come down. Of course, came way down during COVID when everybody got free money. But look at what's been happening here in the last 2 years. This number is now just over 11%. Historically, we're back to the range that we had been in for a very, very long period of time. So it looks like debt service and debt service payments seem to be under control. That would indicate that the consumer is still in fairly good shape. Here's another chart that I wanted to show you. This is from the Bureau of Economic Analysis, BEA.gov. This shows personal income on a quarterly basis for the last few years. This is a nice, organized, steady looking chart. It looks really nice. You can see disposable income steadily climbing over the last couple of quarters, and definitely over the last few years. Now we're going to include personal outlays, meaning this shows disposable personal income. Here's what happens when you add in spending, where the spending goes. Again, same type of steadily climbing, increasing as we're going quarter over quarter. In the aggregate, spending continues to climb steadily. We're not crazy about that, but DPI, also, disposable personal income, continues to outpace spending. This indicates to us that the consumer is still in overall pretty good shape. We have to acknowledge that credit card debt has never been this high before. And we all know plenty of personal anecdotes and personal stories where people are struggling like never before. So we certainly don't want to make light of what's happening to individuals whatsoever. But we don't want to let facts get misconstrued. And we wanted to show you some of the data that we look at as well, kind of help keep things in perspective.